Wow, NVIDIA just dropped another monster quarter. I mean, the performance was so strong, their revenue run rate is now well over $250 billion a year. But if you only look at those headline numbers, you're absolutely missing the real story. Because buried inside this report is both a surprising crack in the company's armor and a hidden strategic win that could secure its dominance for years to come. Okay, let's get into it.
So, here's what we're going to break down. We're going to start with that unexpected China blind spot. Then we'll hit the jaw-dropping financials. After that, we'll uncover a really interesting hidden win with the AI darling Anthropic. Then we'll lay out the bull versus bear case using management's own words, and we'll wrap it all up with the single biggest investor takeaway from this quarter.
All right, first up, let's talk about what I think was the most telling part of the entire report, this surprising crack in their armor that suddenly appeared in China. Now, coming into this quarter, the expectation on Wall Street was pretty simple. Another flawless victory, right? Just total dominance across every single market. But the reality that showed up in the report, well, it was a significant China-sized hole, and it was created by geopolitical headwinds that seem to be getting stronger, not weaker. And look, this isn't just speculation. The company's own CFO, Colette Kress, she stated it plainly. She said, quote, "Sizable purchase orders never materialized in the quarter." That's a direct admission that U.S. restrictions and, frankly, a more competitive local market are starting to have a real material impact on the business. But while China definitely created a pretty big headwind, the rest of the business was an absolute financial supernova. So let's deconstruct these just jaw-dropping numbers. First, the top line. A staggering $57 billion in revenue for a single quarter. I mean, it's a number that's genuinely difficult to even put into context for a hardware company. And here's the thing, it's not just a big number, it's accelerating. That 57 billion represents 62% growth from the same quarter last year. It seems like the law of large numbers just doesn't apply to NVIDIA right now. And they don't expect this to slow down at all. Their guidance for the next quarter is $65 billion. They're literally telling the market to get ready for another record-breaking 3 months. And it's all being driven by what they see as just unstoppable demand for their next-gen Blackwell chips. And this chart, wow, this chart illustrates perfectly where that growth engine is. Out of that 57 billion in revenue, over 51 billion of it came from the data center segment. Everything else, gaming, ProViz, automotive, it's basically a rounding error at this point. This is not a gaming company anymore. It is an AI infrastructure company, period. Okay, so the financials are just completely off the charts. We get it. But honestly, the most important signal this quarter wasn't in the financial tables. It was a really subtle strategic win that was kind of hidden in the Q&A, and it shows their competitive moat is getting deeper and deeper. So where is the real secret to their long-term dominance? I mean, it can't just be about selling more and more chips faster than anyone else, right? There has to be something else. Well, it's right here. In this quote from CEO Jensen Huang, he revealed this deep partnership with Anthropic, who, as you know, is one of the most important AI model builders in the world. And the crucial point he made was that this is the first time Anthropic will be on NVIDIA's architecture. He then just declared that NVIDIA is, quote, "the singular platform in the world that runs every AI model." The strategy here is crystal clear. It's all about making their CUDA software, which is basically the language that lets developers talk to their GPUs, the one ecosystem you absolutely cannot live without. By getting every major model builder to optimize for their stack, they make their platform indispensable. It basically becomes the default operating system for the entire AI industry. So this brings us to the two competing narratives for NVIDIA's future. And using statements directly from the earnings call, we can build both the hyper-optimistic bull case and the more cautious bear case. Okay, so on the bull side, you've got 3 massive platform shifts happening all at once. Generative and agentic AI are creating brand new markets. The company's annual performance leaps actually drive down costs for customers, which is huge, and their ecosystem is just unmatched, running every major AI model out there. But on the bear side, you have those sizable China orders failing to materialize. That's a real concern. Management also warned that input costs are rising for next year, and the whole geopolitical landscape is creating a ton of uncertainty and just fueling local competition. So, after digesting all of that, the China risk, the massive numbers, and the strategic wins, what's the final takeaway? What does this quarter truly mean for the future of this company? The real question isn't about whether they hit $65 billion next quarter. It's about who owns the foundational architecture for the next decade of computing. What this quarter really shows is that while the geopolitical risks are very real, NVIDIA's core strategy is laser focused on becoming the singular, indispensable platform for this entire technological revolution. And that's a much bigger prize than any single earnings report.